And thanks for the TM group for hosting today. I am Melissa Craig. I am the manager of our Strategic Alliances team. We work with the TM group. They are our wonderful partner in the Microsoft space. And just to give you a little overview about me, I'm from Atlanta. I've been in the channel world for about 20 years and with Avalara for 5. I just got my watch in the mail. It was very exciting that I got my 5-year watch. But I'm going to be going over a little bit of the presentation, and then I'm going to go and send it off to Larry. Larry, do you want to introduce yourself?
Sure. Thanks, Melissa. Great to meet everyone. Thank you all for attending. My name is Larry Sheets. I'm a sales executive on the Microsoft team. I've been with Avalara since mid-July 2019, and kind of to that end, I've been our customer-facing rep for our great partnership with the TM group since I started. Love working with you all. My previous experience before Avalara was as a financial advisor with Edward Jones for 3 years out here in Seattle, where we're headquartered. And before that, I was an officer in the Coast Guard for 8 years. But yeah, that's enough about me. Melissa, I'll turn it back over to you.
Beautiful, beautiful. Thank you so much. Here is our agenda today. We're going to go over really sales tax, some of the changes, some of the challenges, and then most important, kind of what is the path to compliance. You know, and thankfully we've got Larry on the call today. He's actually, if you have any specific questions or really are looking to pursue an Avalara solution, you'll be working directly with Larry. So it's nice to kind of put a face with the name even early on in the process. But to get started, why are we here today? We're here because this is difficult. Sales tax is a very cumbersome, non-revenue generating activity that is only getting more and more complex. We're going to talk a lot about Nexus, both economic Nexus as well as physical Nexus. Some of the rules, we actually have it at Avalara. We have 2 huge webinars during corporate webinars during the year. One is our sales tax changes from the year before and what's coming in 2021. And the second one is all of the rules that are changing mid-year, because we're constantly having rule changes that can really impact you and your taxability guidelines. And of course it is, again, only getting more complex, and that just means that the cost is increasing, especially when you look at this as a non-revenue generating activity that is prone to human error, because quite frankly, it's not optional, and the proof is on you on saying that you, 1, charged the correct rate, or if you didn't charge tax at all, that you have the justification on why you didn't. You have that exemption certificate, and Larry's going to talk about that a little bit later. We are seeing that, some industries are more target prone to audits than others. And we are seeing this, especially as we're going to talk about some legislation that happened, the South Dakota versus Wayfair. We're now 3 years out from that ruling. And so this is kind of the time that people are looking at look back periods in terms of audits. So we foresee this actually getting just more and more complex. And then, of course, if you have made mistakes, you have the burden of paying those back taxes and any penalties and interest. And we know that states are getting very, very greedy. 47% of a state's revenue comes from sales tax. And especially with the uncollected sales tax from e-commerce, this has really driven the new legislation that's happened from the South Dakota versus Wayfair decision, as well as marketplace facilitator laws. Let's actually take a step back and talk about that South Dakota versus Wayfair decision. So first, we're using a term called Nexus, and the definition of that is the obligation to collect sales tax based upon your business practices within a certain state. So that is just that obligation to collect sales tax. So when I say Nexus, that's really what I'm talking about. The obligation to register, collect, and then of course remit that tax to the right jurisdictions within a state. But what really has happened with economic Nexus is South Dakota went to Wayfair, you know, the furniture online manufacturer, and said, Wayfair, you have really sold way too much into the constituents of South Dakota. You need to start collecting sales tax. Wayfair went back and said, you know what, South Dakota, no, we don't, because the law at the time was physical nexus, and that's inventory, a person working in the state, also brick and mortar buildings. That's really what constituted that nexus, that physical nexus, or that obligation to collect and remit sales tax. Wayfair said, South Dakota, we don't have one speck of inventory in your state. We don't have one person that lives in South Dakota working for Wayfair, and we don't have any brick and mortar buildings. We're completely e-commerce, so we don't have to do that. This court case went all the way to the Supreme Court, and the Supreme Court sided with the state of South Dakota. They said that no longer is just physical nexus the trigger to collect sales tax, but just based on your economic activity alone, that can be the trigger to make you start collecting and remitting sales tax within a state. And that was just a game changer. That's what the states were really looking for in terms of trying to collect that e-commerce revenue that they never could collect before. So this is a huge area. If you can't come to a Avalara presentation without us really talking about economic nexus and that South Dakota versus Wayfair decision. Not too many times does legislation really impact the sexy world of sales tax automation, but that was really a game changer when it really came to legislation to impact businesses. We're also seeing huge triggers. It's not a matter of if you need an automated solution like an Avalara solution. It's really a matter of just when. So when is that trigger event that's going to make your compliance needs necessary to get an outsourced sales tax compliance solution? Are you going into new geographies? Are you adding new product lines that can really change the complexity of your product taxability? Are you implementing a new ERP? Are you doing migrations to GP? Are you going from NAV to BC, from AX to F&O? There's so many different migrations happening in terms of ERP, adding new e-commerce sites. A lot of the time it was kind of a B2C world. Are you adding a B2B e-commerce experience? All of those are trigger events. And we're seeing a lot of mergers and acquisitions. We're also seeing a lot of PE firms coming in and are doing some funding for different corporations. And one of the big things that they look at is, have you gotten your back office in order? They don't want a lot of that tax liability that could really hamper an influx of funding, especially for PE firms. We're seeing quite a bit of that. And then, of course, we're seeing finance executives moving and changing. That's another huge trigger event. And, you know, the biggest one of all, if you've gone through an audit, you know how painful it is. And you know you don't want to be caught again without having an automated solution to take care of that. We're talking about some additional Nexus creating activities. We're not going to go through all of these, but some of the more complex drop shipment, if you use any drop shippers, if you don't have Nexus in a certain area, but a drop shipper does have Nexus, what are the implications? One of the things that the South Dakota versus Wayfair decision really had an effect on was that they also said this was a states' rights issue. So every state can have different laws associated with their taxability guidelines. And that's why it's so difficult, because you're gonna have 50 states that have different laws affecting their product taxability, their economic nexus activities, and things of that nature. So we're gonna talk, we talked a little bit about that economic nexus. That is really the key driver that is driving all of the complexity and growth. And we're going to talk about that a little bit more in depth. But we're also talking about marketplace nexus. So we're seeing also in the complex world and people going into new areas is that you're selling in many different ways. You might have a brick and mortar store. You might have your own website that you're selling B2C, but you're also might be selling on different marketplaces. You have Amazon, fulfillment by Amazon. You might sell on Etsy. You might sell on any type of different marketplaces. There's so many marketplaces out there. So what are some of the laws that really manage how those transactions and that the tax that are from those transactions are managed? Very complex. Affiliate nexus. So do you have affiliates in certain states that are doing sales? If you go over certain amounts in different states, that can trigger affiliate nexus. And then of course, click-through nexus. That was kind of the precursor to the economic nexus, is if you have a banner ad on a website and somebody clicks, if you did so much economic activity through that particular banner ad, through click-through nexus, that could trigger you having to register and collect and remit in certain states. And this is just shows who has economic nexus laws already on the books. And then of course, marketplace facilitator, affiliate nexus, and click-through nexus. And what I really want to illustrate with this slide is that you can see some states have certain laws, some states don't have laws on the books, but every state can be different, and this is very difficult. So keeping track of all of this, it's no one's core competency. It's 100% non-revenue generating activity, prone to human error. So why are you spending so much time and effort doing this? A lot of people ask us, who is your biggest competition? Quite frankly, it's not other competitors in the space of tax automation. It's still people doing this manually, whether they're doing this with their zip code based taxes in their, or tax codes in the ERP, or just manually looking up tax tables. So manual processes is still our biggest competition in really moving towards an automated solution. So going a little bit deeper into economic nexus, again, every state can be different, and this is where the complexity lies. We're actually going to have to update this slide because Florida just signed theirs into law, and that's coming July 1st. So Florida is going to have a $100,000 threshold. The majority of states do have that $100,000 threshold or 200 transactions. That's what South Dakota went forward with to the Supreme Court. Most states have adopted that except for Kansas. One of the reasons why that $100,000 threshold was put in place is because they wanted kind of a safe harbor law for some of the small businesses, to really protect small businesses from some of the burdens that come with collecting, registering, and remitting sales tax. Kansas, on the other hand, said, you know what? Every transaction that happens in the state of, did I say Texas? In the state of Kansas needs to have registration and sales tax collected and remitted to the state of Kansas. They have no safe harbor law when it comes to small businesses. So from $1 in Kansas, you need to remit and collect sales tax in Kansas. We really thought there was some legislation going back and forth. This is kind of hot off the presses. They actually introduced a law that would actually have a safe harbor law saying that $100,000 would be the minimum. So if you're under $100,000, then you don't have to register, remit, or collect and remit taxes. Just on the 16th of April, the governor vetoed that bill so that there is no safe harbor in Kansas. But you also see, so it's really interesting, Kansas wants their money. That's for sure. One of the reasons why Kansas, I think, vetoed that bill, because in the time that they put the law in place, they collected $5 million of sales tax revenue from those that would have been protected under that safe harbor law that would be under 100,000. So Kansas was really looking at getting their money, that's for sure. California and Texas, those two are states where they don't have a number of transactions, like a 200 limit, but they look at both exempt as well as taxable sales. So they say if you do 500,000 in the state of California and Texas, in those, no matter if they're taxable or not, you need to register, collect, and remit sales tax in those states. Again, just very complex, and every state can be different in terms of their economic activity. So that is, I think, where I'm leaving off, and I'm going to go ahead and turn it over to Larry.
Thanks, Melissa. Do you mind actually going back to the map there for a second? There's a couple things I wanted to point out. So Melissa outlined in great detail the overall complexity of the sales tax landscape since Wayfair in June of 2018. Think of that as the biggest shift in the sales tax landscape in history. So do not feel like you are on the back foot if none of this stuff has applied to you previously. It's all relatively new. A couple things I want to call out though is, in order for us to help you, you do not necessarily have to have a good handle on all this before we do an introductory kind of scoping call. Our job is to help you on the front end figure out where your obligations are. We've got resources that we can leverage just with myself, but we also have an internal tax advisory staff who can do a nationwide Nexus study to really quantify where your obligations are. If maybe you should have registered previously but weren't aware of your obligation to do so, we're the experts, so you don't have to. That's kind of the 30,000-foot view of the presentation today. There's a ton of complexity here, but don't worry, we've got your back. We can show you exactly, what your obligations are today, as well as keep you in compliance as these rules change. Because that's another feature here, is in June of 2018 kind of kicked this whole regulatory landscape into high gear. But in 2019 and early 2020, we saw states lower their thresholds in a lot of cases because they were missing out on customers who were mostly exempt sellers. So as those rules change, our tool is positioned to automatically provide updates to your obligations, as well as to how your products are viewed in a given location, the same way we've always done with local jurisdictions changing their tax rate. So as things change, you don't need to be an expert, because that's what we do day in and day out. So Melissa, you can go ahead and advance to the next slide.
Yep.
So to that piece of mostly exempt businesses, traditionally, you didn't have to worry about sales tax. However, what we've seen from customers going through audits recently who are mostly exempt, think major resellers or manufacturers, their primary audit risk is in the management of their exemption certificates. This is an area that we've seen auditors really focus on, because frankly, coupled with the Wayfair Nexus expansion, we found that customers either don't have all the exemption certificates they're required to do, because when you think sales tax calculation, it's proving why you did not collect tax if you didn't. And that's typically presenting a current valid exemption certificate to that auditor. So if you advance to the next slide, Melissa. This is a perfect example. These are two customers that we've worked with since Wayfair, who their previous Nexus footprint was just in a handful of states, but overnight, when these regulations went into effect, they saw their Nexus footprint expand exponentially, and therefore, even though they're not going to be collecting tax on most of their sales, they are required to collect a massively larger number of exemption certificates to stay in the good graces of each of these states. You know, in terms of 1,100, more than 5,000. Our exemption management platform is known as Cert Capture. It's really the best in class, and it can help you either manage this expansion yourself through running things like email campaigns on your letterhead to prompt quick, efficient collection of those certificates you're missing, updating exemption certificates that need to be renewed. For example, you know, like everything else in the sales tax landscape, each state is allowed to have their own requirements for renewal, the form that they want you to submit, all of that stuff. So Florida, for example, requires annual renewal of your exemption certificates, whereas most other states are 3 to 5 years. So we provide you that back-end tool to actually see, all right, for my Florida customers, here's when they need to be renewed. For my California ones, here's when they need to be renewed, all of that good stuff. But more importantly, we also have the ability for our team of experts in our Durham headquarters to collect and update and validate all those certificates on your behalf. Because really the complexity is not only, am I collecting the certificate, it's, is this even the right form? Our service guarantees you'll collect the correct form each and every time. It provides you a tool to make sure, all right, I've got the correct form. Is it filled out correctly? And just make that process much more efficient. You know, because no one, especially if you're looking at collecting another 1,200 or 5,000 exemption certificates, do you want to be sending 5,000 individual emails or 5,000 individual phone calls? Our tool allows you to do that efficiently, or you can outsource that fully to us and we can collect on your behalf. So there's a lot there that we can dive into, but I'll just kind of leave it at that high level for now. Melissa, you can go to the next slide. All right, so we've talked about a little bit about calculation and management of exemption certificates on the front end. Our product is designed to be, in an ideal scenario, a true end-to-end solution. So on the back end, we can help you with all of the state and local tax preparation and filings. Things of, are you using the correct form to file? Are you filing in the correct method, whether that's mailing in the form, filing electronically? Same thing with remittance. If you would like Avalara's assistance with the filing and remittance challenge, we take all of that work off your plate completely. All we need to know from you is where are you filing and how frequently, and we handle the rest, assuming that we're doing the calculation on the front end as well. That includes the local filings for states like Colorado, where you could be looking at local jurisdictions, same thing with Louisiana with those parishes. We're one of the few vendors that not only can fully outsource your state filings, but we can also handle the local filings as well. That's pretty rare in this industry. If you get a tax notice from a particular jurisdiction, all you would need to do is upload that to our system and we take it from there. The whole goal of this feature is taking all of that burdensome compliance that's also adding risk to the business off your plate completely, while also guaranteeing that it's being done accurately and timely. So if we're calculating sales tax for you, we guarantee it's going to be accurate every time. If we're filing and remitting on your behalf, we guarantee you will never miss a filing and it will always be with that jurisdiction's specific requirements. See, next slide. So how do we do all this? We do it through automation, typically through one of two pathways. We are the leader in this space in terms of pre-built certified integrations, meaning, you know, in my case, customers using any sort of Microsoft product for accounting or CRM, we have pre-built connectors that we designed with Microsoft and we maintain in-house. So we plug directly into whatever systems you're using. That gets you up and running as quickly and efficiently as possible. We also have a best-in-class API for your custom in-house shopping carts, for example, where you can write your own integration using our API. So it's designed to automate this process. We do the calculations, for example, in 0.4 of a second. all of those repetitive tasks, you know, taxability lookups, tax rate lookups, that goes away entirely with our guaranteed accurate calculation. We provide you great reports, I believe 55 to date, that are available to you on your Avalara dashboard, where you can use that in this big data line item to look at trends, help you evaluate, you know, your monthly or quarterly or year-end reconciliations with your general ledger. We provide all of this information to you to provide a clean, efficient, optimized sales and use tax process. So next slide. So one piece here on the COVID-19 landscape and what we've seen as far as trends. We've been able to help a ton of businesses ride out the effects of COVID through, you know, for most businesses that have survived and thrived, they've launched things like an e-commerce channel for the first time. We've helped identify best practices, share those, as well as leveraging certain unique features of, you know, Avalara's compliance landscape to make this solution as cost effective as possible. So on the front end, we can help you calculate all the way through the back end, payments, returns, filings, as well as industry insights, and then also membership in the Streamlined Sales Tax Organization, which I believe is the next slide. This is a unique feature of working with Avalara for your sales and use tax compliance. So Melissa gave great insight into the US government seeing sales tax as a states' rights issue, meaning each state is allowed to mandate compliance within their borders with their own criteria. Practically speaking, more than half of the states with sales tax regulations on the books banded together and said, we need to standardize what we're asking of businesses, because if we all keep doing our own thing, this creates an undue burden on businesses just trying to do the right thing. So what they did is they standardized their requirements, and then they solicited for certified service providers. Avalara, I believe, was the very first one. It was a rigorous audit process that took, you know, 3 to 4 years. We are the leader in this space. And now what this means for you is that pending certain criteria, meaning within 24 states, your nexus is purely economic, so meaning you have a minimal, if any, physical presence in that state with the criteria here, the no fixed place of business for more than 30 days, less than $50,000 of property and payroll, and then less than 25% of total property or payroll in that state, gets you subsidized compliance in more than half of the states in the US that require businesses to collect and remit. So what that means from an Avalara pricing perspective is you would get all of our services for calculation, registrations, filings, and then most importantly, audit support in up to 24 states free of charge. It's a unique feature about working with Avalara. I'm happy to share more information after the call, but it's absolutely something that's part of our initial scoping process. You know, as we're evaluating where each customer's Nexus obligations are, we also do an exercise to pre-qualify you for this program. All right. So at Avalara, we've got a lot of great information free of charge on our website. We've got a COVID-19 resource hub to help you kind of navigate the complexity around compliance in this pandemic landscape. You know, we've talked at length today about Nexus, and Nexus is really more than just economic Nexus. The previous physical presence requirements haven't gone away, so the added complexity, the ever-changing regulations, all of those are updated and maintained free of charge on our website for you to look at any point. We also have an Avalara Commerce Monitor, so you can learn about national trends specific to your given industries. And then we also have a wealth of information on sales tax automation in general. I'm your initial point of contact, but again, I also have access to pull in our industry-leading experts in things like system automation from a technical standpoint for your IT staff, from tax technology, for the tax folks, as well as our in-house tax advisory staff that we've already spoken about. If you have concerns about back filings, maybe you triggered Nexus, you know, way earlier than 2018 and are just coming to that realization now, we can help you go to the states anonymously to mitigate those penalties and fines, as well as limiting the look back periods, everything associated with voluntary disclosure agreements. We can do that in-house. So this is a lot of information, all to say we are the true end-to-end leader in sales tax compliance automation. Everything associated with it, as you look at maybe selling outside of the US into the, the global landscape, we can help you with that compliance. We can help you with your use tax self-assessment processes. We can also assist with international selling, with the customs and duties regulations and associated costs to either you or your customers. We can automate that as well. We're really a true end-to-end solution designed to make the overall burden of sales and use tax compliance a non-issue for you and allowing you to get back to doing what you do best.
Beautiful. Thanks so much. And we wanted to actually just finalize or wrap things up regarding, we do have a virtual event that's happening May 27th. This is our Avalara Crush. This is our preeminent event that we have every year. We're having to do a virtual last year and this year, but it's still going to be an amazing event. We certainly welcome you to sign up. It is a free event, which is always nice as well. So certainly a lot of amazing information, industry-leading experts speaking about all different taxability issues that if you want to learn more about this, you can go to our website for our Avalara Crush. But with that, we can open it up for questions. And certainly, if you don't have questions now, you can always email Larry. Larry's going to be your guy to speak with in terms of any questions that you might have. But do we have any questions already in the chat at all, Allie?
Yep, we do have a few questions. The first one being, does physical presence still factor in post-Wayfair?
Yeah.
It absolutely does, yes.
Absolutely.
Yeah, post-Wayfair, again, most businesses saw the new regulation as maybe replacing physical presence. That is not the case. Physical presence is still there. So, as states open up and maybe you have traveling sales reps going to individual states, that could be a physical presence trigger, but that's something that we can certainly help you evaluate your obligations.
Great, thanks. The second question is, how is SST eligibility determined?
Oh, that's a good question. I'll go back to this slide. This is where you've got to qualify as a volunteer status for that, for the SST to get those subsidized. So again, Larry, do you want to go through some of those qualifications to get volunteer status?
Sure. Yeah, so as part of our initial discussion, one thing that I look at is your revenue as well as your total sales orders by state. And then we'll look at, do you have inventory located in that state? Do you have remote salespeople located in those states, or a place of business? Because those are the main triggers. To qualify to have your compliance subsidized in the SST states, you can't have a fixed place of business for more than 30 days in the past 12 months. You can't have more than $50,000 of property or payroll in the state, and you can't have more than 25% of total property or payroll in that given state. That's really it. Once you qualify, you have to requalify on a rolling 12-month basis. But again, that's something that we can help you with. Those are the criteria and are unchanged, frankly, since the program was launched. So we can work with you to help kind of identify maybe in a way to keep your physical footprint small, to maximize what can be subsidized by the given states. So I'm happy to share that criteria as well as links to more information on the streamlined sales tax program after the call. But that's really it, those three core ones that really are asking the question of, do you have physical presence in that state?
Great. Thanks, Larry.
Yeah.
Our third question is, what states have you seen that are being more aggressive in going after businesses?
You know, I don't know if we have some exact numbers. I know that, you know, even previous to COVID and to the Wayfair decision, we saw Idaho hiring 40 auditors, which was just kind of insane to me. So we are seeing, you know, auditors certainly get hired, and Idaho, I know, is one area where they were looking at doing this on a part-time basis, but it was a very successful program in driving revenue for the state. So they actually wanted to keep them full-time. So those auditors are now full-time status instead of part-time, just to drive revenue to these states. I don't know, Larry, do you have additional insights that I'm not aware of?
Yeah, there's a couple things. In 2019, so all the way up through year-end 2019, we saw California more than double their audit workforce from the previous year. So that was huge. We haven't seen the audit activity yet, but that's directly tied to COVID. So we expect that to kind of ramp up, as well as just the COVID landscape in general. All of these states are hurting for revenue. So we expect aggressive audit activity later on in 2021, as well as throughout 2022. So getting into compliance now, or at least taking a look at what your obligations are, is critical to get ahead of kind of the expected audit wave that we think is coming.
Great, thanks.
Thanks, Larry. And our last question is, where do you see most businesses being audited and receiving fines?
Well, some of the low-hanging fruit for auditors is certainly around our consumers' use tax, as well as exemption certificates. So if you're collecting sales tax revenue, you know, if you're off, you know, if you're doing a state 8% when it should be, you know, 8.5%, those aren't the ones that are driving a lot of the audits or a lot of the penalties. Where people are really seeing a lot of issue is when you don't get your consumer's use tax correct. And then also, if you're not collecting sales tax for some reason, you need to have that justification as to why you didn't collect that revenue. So you must have that valid exemption certificate, and that's a really low-hanging fruit for auditors, is identifying where you didn't collect sales tax, and you need to justify why you didn't collect sales tax. Larry, do you want to expand at all?
Yeah, you hit the nail right on the head, Melissa. One story I'll share, especially about the exemption certificate management piece of this, because on the sales tax side, Melissa's absolutely right. That's certainly the low-hanging fruit for auditors. So I'll share a story from roughly a year ago. We onboarded a new Microsoft customer in February. In late April, early May, they let us know that they had received an audit notification from a state that they had just registered in. When that auditor found out that they were a new Avalara customer utilizing Cert Capture, our exemption platform, that auditor said, great, I know Avalara well. Go into your dashboard, pull the following reports for me, send them over. I'll look at it, because that would also contain the exemption data. I'll let you know if we even need to come on site or if this will suffice. So if we can guarantee that we are helping you collect and validate what you need to have in the first place, and then giving you the tool to keeping those certificates in effect, meaning none of them have expired, the auditors know that you're doing it correctly. So the amount of time that you need to prepare for and defend the audit, let alone dealing with potential penalties, is massive. We're giving you that time back while also removing that risk from the table completely.
Awesome, thank you.
Thanks, Larry. That was our last question.
All right. Well, thank you so much for your time. And again, let Larry know, or of course, let Allie know, or your team, our TM group rep, and they can get a hold of us as well. So we certainly appreciate your time today.
Thank you so much.
Yeah, thank you for presenting today, and thank you everyone for joining, and have a great rest of your day.
Wonderful. Bye-bye.
Bye.